So everybody, the first two main important events of the new year are happening this week. We've got the phase one trade deal with China, and we have earnings starting to trickle into the market. Jack, I'm going to start with you here at the desk. You say this phase one trade deal takes one of the biggest risks off the table for the market. But how convinced are you that this is the beginning of perhaps the end of the trade situation?
I think this is really tremendous news because for quite some time we had a lot of false starts when it came to trade negotiations. We kept hearing something was in the pipeline and then nothing ever actually materialized. But come this Wednesday, it really seems like we were getting pen to paper an honest trade deal. But it is phase one, which means there are other phases to come after it. And while I think it is really good news because it means that people are willing to negotiate, both sides are willing to come together and talk about this, I think for various political reasons, we're not going to see a phase two or phase three or phase four or however many phases there are, probably until sometime in 2021. So it's good news in the sense that markets now know that both sides are willing to play ball, but I wouldn't get too excited about things just yet. There's a whole lot more work to do.
All right, so Victoria, Jack thinks we might not get a phase two until after the election. How optimistic are you about this trade deal?
You know, I agree with Jack that I think a lot of the optimism in the market this morning has to do with the signing on Wednesday. But again, until that is signed, until we actually see it happen, I don't think you can say 100% that we're going to see that come through. We are optimistic that it will happen, but I want to see the signing on the dotted line first. And again, we don't know exactly how extensive this trade deal is. So much of the issues were around intellectual property, technology transfers. A lot of that I'm assuming is not going to be until a phase two. And I do agree that we'll probably see that after the election. I think the president over the weekend even mentioned before when he was saying it would be immediately they would start dealing with that. It looks like it might wait until 2021.
All right, want to get over to Heidi Chung over at the Interactive Board for a look at what world markets are doing.
Good morning, Alexis. Yeah, as we can see here, broad indices around Asia, all higher. We're seeing a different picture here in Europe. But turning to the U.S., like you mentioned, it's a very, very busy week ahead. We have the U.S. and the U.S. and China looking to ink that phase one trade deal on Wednesday. And then we have earnings season kicking off with the big banks looking to report this week. So it's going to be a busy week. But as we can see, investors here are really still piling into risk assets. We have the Dow futures here up about 92 points, and we are about 15 seconds or so away from the opening bell here. So we'll see how we open, but it's looking to be a solid one.
Great segue, because here is the opening bell at the New York Stock Exchange and the NASDAQ to kick off another trading week on Wall Street. We saw some optimism there in the futures. Looks like the Dow Jones Industrial Average is going to start the day on the plus side by about 58 points. So, Jack, Heidi mentioned earnings. They're going to start this week with the banks. Tomorrow alone, we get JPMorgan Chase, Wells Fargo, and Citi. What are your expectations for the financials this earnings season?
So we're looking at very strong earnings growth across the board, particularly in financials. But we have to remember that this is because the comparisons are just so soft. This is fourth quarter earnings. We all remember what happened in the fourth quarter of last year, markets selling off. And because of accounting reasons, we saw a number of companies with large equity positions on their balance sheets take enormous hits in the fourth quarter. We anticipate coming in to this year and looking at this earnings season, 13-14% growth, but still reiterate our target this year's earning growth of between maybe 4 and 5%. So a whole lot more moderate after this quarter shows up.
All right, here are the headlines making the first trade front page this Monday. Iran cracks down on protesters after admitting it downed a Ukrainian passenger plane. China's Vice Premier Liu He reportedly on his way to the U.S. to sign a phase one trade deal. And in an exclusive interview, Microsoft CEO Satya Nadella tells Yahoo Finance tech is a key part of the U.S. economy and that if retailers are smarter with customer data, they'll have a higher gross margin for new business. Victoria, I want to get to you just to bounce off of the Nadella stuff there. Tech. Tech had a pretty good year last year. What are your expectations this year? A lot of people are saying energy, which was a laggard in 2019, may actually trump tech. What are your thoughts?
Right. There's a lot of conversation, Alexis, about the whole reversion to the mean, right? So those that were laggards last year will become the best performers this year. I'm not sure I'm completely in that camp that energy is going to be your best performer. I really think you still are going to see some of those growth names, some of those tech names, even the financial names are going to continue to do well, because look at the factors that we had last year that drove this market. A lot of it was really based in the consumer and the strong labor market and the income and the household debt that we saw saw that was really strong compared to previous years for the consumer. And that is still the case. That has flowed through into the beginning of 2020. And if those tailwinds are still in place, I don't see there's any reason that some of those same sectors can't continue to do well. So I mean, we've added to Apple, we've added to Amazon lately, and I think those are names that you can still look to put in your portfolio on pullbacks in the market. I don't think you necessarily go all in on an energy name.
All right, want to get a closer look at what the Dow is doing here in the first couple minutes of trading. Heidi, what have you got?
Hi, Alexis. Yeah, so all three of the major indices opening higher today. We have the Dow up about 33 points here. The Nasdaq seeing the strongest gains, up about 0.3%, but pretty solid overall. Let's take a look at what's moving within these indices, specifically with the Dow here. We have Goldman Sachs, Apple, Cisco, and American Express leading the charge higher. On the flip side, the laggards here, we have IBM and United Health. United Health down about 1% here. Taking a look at the movers in the Nasdaq 100. Two of the largest movers, we have Tesla and Ulta. Tesla really getting a boost this morning after Oppenheimer boosted the price target to a street high of $612 per share from $385 per share. Now, that new price target represents about a 25% move higher from current trading levels. Now, the analysts there saying Tesla has gone through growing pains, but the company has reached critical scale sufficient to support sustainable positive free cash flow. Now, there has been a lot of bullishness for the past couple of weeks when it comes to Tesla, and actually the past couple of months here. But another big mover that I want to highlight here is Lululemon, the company boosting its profit and revenue guidance for the fourth quarter, citing momentum during the holiday shopping season. So we're seeing Lululemon shares up nearly 2% here in early trade. Taking a look at the S&P 500 sectors, we have tech, utilities, and communication services leading the charge there, outperforming the broader index. Meanwhile, energy continuing to struggle here, as well as healthcare. Alexis.
All right, thanks, Heidi. So you heard it, Jack. Tech leading the advance today. Victoria was just saying that her firm has added to their positions for Amazon and Apple. What are your feelings? I mean, is the runway a long one for tech in 2020, or do we need to be more choosy this year?
I think tech is absolutely going to be more of a strategic play than, say, a tactical play at the moment. There are a number of challenges facing the sector right now. I think valuations are a little bit rich, and we have some potential for perhaps regulatory concerns. But I think over the long run, technology is not going anywhere. It is only becoming more and more integrated in our lives. Most people have smartwatches pretty soon. People will have smart glasses. It's only getting bigger. And I think that this is a long-term secular trend that investors can really bite into, but they have to be willing to take a little bit of pain, perhaps in the short term.
You know, volatility is something, Victoria, we haven't seen a lot of in this market late last year and now the beginning of this year. What's it going to take to bring volatility back to this market?
Well, Alexis, we've seen some short-term volatility, right? Obviously, last week with the Iran situation, we saw some volatility come into the marketplace. I think we're going to continue to see that going forward because even though we've had some uncertainties with the China trade war come back from the market, there's still quite a few things that we still have to face in this year. We still have some obstacles. I still think Boeing is an issue we're going to have to watch. There's obviously other geopolitical issues that could raise its head. We have North Korea. Don't forget we have Brexit. And obviously we have the election coming. So there are opportunities, including earnings that kick off really big in the morning, that could cause some volatility going forward. I think you use that volatility as an opportunity to add to your portfolio or take advantage of some different strategies, whether it's covered call or dividend payers. Find a way to take advantage of the volatility because I think in the long term over the course of the year, the trend for the markets will still be higher.
I need to point out Tesla here in the early going. The stock has just crossed $500 a share. For all those naysayers out there, Tesla seems to be off into the stratosphere here in 2020. Victoria, do you have a position on Tesla? And even if you don't, what are your thoughts on this milestone for the company's stock?
We do not have a position in Tesla. I have to say I'm pretty amazed at the run that we have seen. When the company first came out and we do very much a bottom-up approach on these equities that we hold in our portfolio, and the balance sheet just did not warrant us taking a position in it. And even still, there's so much uncertainty within the company in regards to the management, in regards to them meeting their expectations for deliveries. They're expanding quite rapidly. So all of that gives us a little bit of concern, but yet they still manage to continue to surprise everyone.
Yes, they do. And, this, of course, comes, Jack, on the same day Ford came out and said China sales were down for the third straight year. We know Tesla has that Shanghai factory. They're looking at a big opportunity there. Overall, for auto, which hasn't moved a lot lately, how do you see the auto market shaping up, auto stocks this year?
I think the auto market is a little bit challenging right here in the United States because I think the general trend right now is that people aren't buying cars in the same volume as they had before. We had that Cash for Clunkers program come out shortly after the financial crisis, which sort of forced or at least incentivized a lot of auto buyers here in the United States to buy a new car back then. Cars last a long time now. They're really well built. It's not something that you necessarily have to buy every 6 months or every year. Most people hold on to them for quite some time. We've seen shrinking sales. We also see that as people become increasingly more urbanized, they rely less on cars. The rise of things like rideshare or just using a cab, public transportation. So there is certainly still a market out there. I think we have to look overseas to places like China. But I think here in the U.S., things are slowing down a little bit in terms of demand.
All right, Jack Manley, Victoria Fernandez, Heidi Chung, thank you all for being with us. Have a wonderful week ahead.
Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.